Welcome to the Deep Dive. Today we're zeroing in on BlackBerry Limited's latest financial performance, specifically their results for the fourth quarter and the full fiscal year ending February 28th, 2025.
Right.
You shared their recent 8K filing, that's the official SEC report, along with the press release, and our goal is to really, get under the hood here. We want to pull out the most crucial insights about how they're doing and what their plans are moving forward.
Exactly. We've got the full detailed financial picture from their SEC filing alongside the more accessible summary in their press release. This combination gives us a pretty robust understanding of their financial health and, their strategic direction.
And why should this grab your attention? Whether you're tracking the pulse of the tech industry, maybe have a long-standing interest in BlackBerry's evolution, or you're just intrigued by the dynamics shaping enterprise software and automotive tech, this deep dive is for you. We're going to try to cut through the financial jargon and really highlight the truly significant aspects of BlackBerry's current position and their future roadmap.
Sounds good.
Okay, let's unpack this, starting with those key financial highlights from Q4 of their fiscal year 2025. Revenue seems like the logical place to begin.
Agreed. For the fourth quarter, total company revenue reached $141.7 million. And what's really interesting here is that this wasn't just, in line with expectations. It actually exceeded their own forecasts.
Oh, right.
Digging into their main business segments, QNX, their embedded software for automotive, and, Beyond Now brought in $65.8 million. This also surpassed their guidance.
Right.
Now, while it was the same as the year before, it showed a positive upward trend with a 6% increase compared to the previous quarter.
That sequential growth for QNX, that feels like an important signal, doesn't it? Especially when we consider some of the broader discussions around the automotive market.
Absolutely. What about their other key areas?
Well, their secure communications division also delivered strong results, hitting $67.3 million, which was, again, above their internal targets. Even their licensing revenue surprised on the upside, coming in at $8.6 million for the quarter.
So really across the board then, it seems they managed to bring in more revenue than they'd anticipated?
So they're not just meeting expectations, they're beating them. That's definitely a positive sign on the top line. But what about profitability? How did they perform in terms of, actually making money?
Right, profitability. They also outperformed their own projections there. Their adjusted EBITDA, think of that as a measure of their core operational profitability. Earnings before interest, taxes, depreciation, amortization.
Right, the usual measure.
Exactly. That reached $21.1 million, which was better than they had predicted. Similarly, their adjusted earnings per share, or EPS, which gives us an idea of profitability on a per-share basis, also exceeded their forecast at 0.03 cents.
3 cents adjusted.
Yeah. And even looking at their GAAP numbers, the generally accepted accounting principles, which follow, more standardized rules, their basic loss per share improved significantly to just $0.01.
Oh, wow, just a penny loss under GAAP. That move closer to profitability, that does feel like a meaningful step.
It really does. That shift towards profitability, even under those stricter GAAP guidelines, often is seen as a significant indicator of underlying improvement.
Okay. Now, cash flow and the overall health of their balance sheet, always critical when assessing a company's financial standing. What did the report tell us there?
Here's where it gets really interesting. Their operating cash flow, the cash generated from their regular business activities, was notably strong, also exceeding expectations. It showed a substantial improvement of $57 million compared to the same period last year, reaching $42.0 million.
$57 million improvement. Wow.
Yeah. And furthermore, their total cash and investments saw a significant jump of $144 million compared to the previous quarter, ending at a healthy $410 million.
Okay, $144 million sequentially. Where did that come from?
Well, this increase was driven by that strong operating cash flow we just mentioned, and also included approximately $80 million they received from the recent sale of their Silence business.
Ah, right, the Silence sale. We'll definitely need to circle back to that.
For sure. That influx of cash provides them with considerable financial flexibility.
Got it. But before we dig into Silence, let's quickly touch on their gross margins. That gives us a sense of how profitable their core products and services are, right?
Right. Their total company adjusted gross margin came in at a healthy 74%. Looking at the individual divisions, QNX had a very high gross margin of 83%.
83, wow.
Although this was slightly lower than both the previous quarter and the same quarter last year. Secure Communications had a gross margin of 64%, which decreased compared to the previous quarter. They attributed that change to the specific mix of products sold during that period.
Okay, product mix effect. Makes sense. So a strong finish to the quarter overall. Now, let's broaden our view and look at their performance for the entire fiscal year 2025. How did the whole year shape up?
For the full fiscal year, their total company revenue reached $534.9 million.
Okay.
In terms of overall profitability for the year, their adjusted EBITDA also exceeded their guidance, coming in at $84.2 million.
Over $84 million adjusted EBITDA for the year.
Yes, and they reported an adjusted net income of $12.5 million for the year, and their adjusted basic earnings per share was $0.02.
2 cents adjusted EPS for the full year.
So they moved into positive territory for the full year on that adjusted basis, which often signals a significant turning point.
Absolutely. Moving into the black for the full year, even on an adjusted basis, sounds like a key achievement. What were some of the standout performers when we look at the individual divisions over the entire fiscal year?
QNX really shone. Their revenue grew by 10% compared to the previous year, hitting the upper end of their projected range at $236.0 million.
10% growth for QNX. Solid.
And even more impressively, QNX's adjusted EBITDA saw a substantial 76% increase year over year.
76%. Okay, that's significant leverage.
It really is. Secure Communications also exceeded their full-year revenue guidance at $272.6 million. And the licensing division contributed $26.3 million in revenue for the year, also with strong adjusted EBITDA. It really highlights the strength in their core technology areas.
It certainly sounds like QNX was a significant driver of growth for them this past year. Now, let's shift our focus to some of the strategic decisions and other key business highlights that were outlined in the reports. The sale of Cylance was a major development, wasn't it?
It was a significant move, yeah. BlackBerry successfully completed the sale of their Cylance endpoint security assets to Arctic Wolf. As we mentioned earlier, this resulted in an initial cash payment of approximately $80 million.
Right, the $80 million.
What's particularly interesting here is that BlackBerry didn't completely sever ties. They retained some key assets from Cylance.
Oh.
Like
Wow.
colluding their artificial intelligence and machine learning patents related to endpoint security, as well as some tax benefits, tax losses, specifically that they anticipate will be valuable for their U.S. operations in the future.
Retaining the IP and tax assets. Smart.
Seems like it. They also noted that many Cylance employees transitioned to new roles at Arctic Wolf as part of the deal. This suggests a strategic streamlining rather than a complete exit from the cybersecurity space, maybe?
So it appears they've simplified their business focus by divesting Cylance, while still holding on to valuable IP and gaining some financial breathing room. What other strategic moves or significant business developments did they emphasize?
They highlighted a number of important initiatives, particularly within their QNX division. They established a partnership with Microsoft
Microsoft, okay.
to make their latest QNX software development platform, version 8.0, accessible on Microsoft Azure. This broadens the availability of their platform to a wider range of developers, obviously.
Right, Azure integration makes sense for reach.
They also expanded their ongoing collaboration with AMD, the semiconductor company, to support a larger selection of AMD's adaptive computing devices, which are used in areas like robotics and other advanced embedded systems.
AMD partnership expansion. That fits the beyond automotive theme.
Exactly. These partnerships seem designed to integrate QNX into broader technology ecosystems.
Those partnerships do seem strategically important for expanding the reach and applicability of QNX. Were there any other noteworthy collaborations mentioned?
Yes, they announced a multi-year collaboration with Vector and T-Tech Auto, both leading companies in the automotive, software, and electronics sectors.
Vector and TT Tech, big names in auto.
Their aim is to develop a pre-integrated software platform for vehicles, which could potentially speed up and simplify the development process for car manufacturers.
Pre-integrated platform. That sounds appealing for OEMs.
Definitely. They also launched the QNX General Embedded Development Platform, or GEDP.
GDP.
Yeah, which is targeted at accelerating the creation of high-performance embedded systems across various industries, not just automotive. This signals a clear intention to diversify QNX's applications.
So a real push to leverage their core QNX tech across a wider spectrum. That aligns with the growth areas they've been discussing. Any other partnership news worth noting?
They also collaborated with Intel and Necobot to introduce a functional safety platform specifically for robotics, again leveraging QNX's reputation for reliability and safety-critical performance.
Intel and robotics, another example of diversification.
And to further grow the community of developers familiar with their tech, they partnered with Pi-Square Technologies to offer software engineer training programs in India, aiming to build a larger talent pool for QNX development.
Building the ecosystem in India. Smart long-term play. It really does seem like QNX is at the center of their strategic growth ambitions, focusing both on strengthening their position in auto and actively moving into new embedded markets. What about their secure communications division? Any key developments on that front?
They reported an expansion of their existing relationship with the Malaysian government, which will see an increased number of government users utilizing their secure communication products.
More users in Malaysia. Good sign for government traction.
Yeah, it highlights the continued demand for their secure solutions within that sector. Additionally, their Smart division achieved a significant certification from the German Federal Office for Information Security, the BSI.
Ah, the BSI certification in Germany. That's a big deal.
It is. It's for their Suite for iOS solution. This certification allows them to provide highly secure encrypted voice and data communication on Apple devices to German government agencies, which is a crucial validation in a key European market.
That German certification definitely sounds like a significant validation for their security offerings in a pretty demanding market.
And we also noticed a mention in their report about branding. It seems they're making a subtle but potentially important change.
Yes, they indicated that their IoT division will now operate solely under the QNX brand.
Just QNX dropping the IoT label.
Apparently so. This seems to be a deliberate effort to capitalize on the strong recognition and reputation of the QNX brand as the primary driver of that part of their business. It suggests, confidence in the QNX name and its growing market presence. That makes strategic sense, given the strong performance and future growth potential they've been emphasizing for QNX. Okay, so we examined the recent performance and some key strategic moves. Now, what are BlackBerry's expectations for the upcoming fiscal year 2026? What kind of guidance did they provide?
Looking ahead, they've provided financial targets for both Q1 and the full fiscal year 2026. For the full year, they anticipate total revenue to fall within the range of $504 million to $534 million.
Okay, $504 to $534 million total revenue.
Within that overall figure, they are projecting further growth for QNX with a revenue target of $250 million to $270 million.
QNX growth continuing, up to $270 million.
And they expect QNX adjusted EBITDA to be between $55 million and $60 million. This signals continued confidence in QNX's growth trajectory.
So continued growth expected for QNX. What about their secure communications division? What are their projections there?
For secure communications, they are forecasting revenue between $230 million and $240 million for the full year.
$230 to $240 million for secure comms.
And they're also placing a strong emphasis on profitability in this division, with adjusted EBITDA projected to be between $34 million and $44 million.
Focus on profit there, okay.
They also noted that their secure communications annual recurring revenue, or ARR, currently stands at $208 million, which provides a solid recurring revenue base for their forecast.
Right, that $208 million ARR gives them a foundation in their licensing business. What are their expectations for that segment?
They expect licensing revenue to be approximately $24 million for the full year, with adjusted EBITDA around $20 million.
$24 million revenue, $20 million EBITDA from licensing. Got it.
They also provided guidance for their adjusted corporate costs, anticipating those to be around $40 million for the year.
Okay, $40 million corporate overhead.
Yeah.
So when we piece all of that together, what's their overall outlook for profitability at the company level for the coming year?
They expect total company adjusted EBITDA to be in the range of $69 million to $84 million for fiscal year 2026.
$69 to $84 million total adjusted EBITDA. Seems roughly flat to slightly down compared to FY2025's $84.2 million actual.
Yeah, the range brackets the FY25 result. On a non-GAAP basis, they are projecting basic earnings per share to be between $0.08 and $0.10.
8 to 10 cents adjusted EPS. That's up from 2 cents in FY25.
Right. Suggests they anticipate further improvement in overall profitability on a per-share basis, perhaps due to share count changes or lower interest tax impacts in the adjusted numbers.
Okay. And what about their cash flow expectations for the year ahead? Always an important metric to monitor.
They anticipate operating cash flow to be approximately $35 million for the full year.
$35 million operating cash flow for the year.
However, they did point out that they expect the first quarter Q1 to see a cash outflow, a usage of $20 to $30 million.
A cash burn in Q1.
Why? They attribute it to the timing of billing and payment cycles. So it sounds like a working capital timing issue rather than an operational problem. Providing that context for Q1 gives a clearer picture of their cash flow expectations throughout the year.
It's helpful that they provided that specific detail for the first quarter. Were there any particular uncertainties or potential risks they highlighted in their outlook for the coming year?
Yes, they did mention some uncertainties in the automotive market, primarily related to potential impacts from changes in tariffs.
The tariff question again.
Right. They also noted some uncertainty in government markets due to possible shifts in policy, although they stated, importantly, that they haven't experienced any significant material impacts from these factors to date.
So watching brief, but no major hits yet.
Seems that way. They are aware of potential external headwinds, but haven't seen them significantly affect their business yet, according to them.
So they're acknowledging potential challenges on the horizon, but haven't seen them materialize in a significant way so far. Now, you mentioned some key performance indicators earlier. Let's revisit those briefly. What were the important metrics they were tracking?
For secure communications, as we mentioned, their annual recurring revenue, ARR, increased year over year to $208 million.
Up year over year.
Although it did see a slight dip sequentially by 3%.
Okay, down slightly quarter on quarter.
Their dollar-based net retention rate, or DBNRR, for secure communications was 93%.
93% DBNRR. That means some churn or downgrades, right?
It implies that, yes, it showed a small increase compared to the previous year, but a slight decrease compared to the previous quarter. Interestingly, though, they highlighted that Ad Hoc's DBNRR remains above 100%.
Oh, specifically Ad Hoc is over 100.
Yeah, which indicates strong customer loyalty and an ability to grow revenue within their existing Ad Hoc customer base. A DBNRR above 100% is always a good sign of customer satisfaction and upselling success within that specific product line.
That DBNRR for Ad Hoc being above 100% is indeed a positive indicator, maybe offsetting weakness elsewhere in secure comms. What about QNX? Any specific key metrics highlighted there?
Yes, QNX's royalty backlog grew to approximately $865 million.
$865 million backlog for QNX royalties. That's substantial.
It is. This is a really important metric because it represents the future revenue they anticipate generating from existing contracts where QNX software has been designed into vehicles and other embedded systems.
So it's already locked in, essentially.
Well, it's based on contracts for design wins, yes. It's a strong indicator of their future revenue potential in that core business area. That substantial backlog suggests continued strong demand for their QNX technology, even with market fluctuations.
That significant royalty backlog for QNX certainly paints a picture of a solid future revenue stream. Now, beyond the official financial reports, BlackBerry also held a conference call with analysts. Were there any noteworthy insights shared during that call that you picked up on?
Absolutely. Regarding the potential impact of tariffs, while they are closely monitoring the situation, they reiterated that they haven't seen any significant disruptions to the supply chains of the automotive OEMs they work with.
Okay, so OEMs aren't reporting major issues to them.
Not yet, it seems. They also highlighted that over 50% of QNX revenue originates from outside the United States, which provides a degree of insulation from any U.S.-specific tariff issues.
Right, that geographical diversity helps.
That diversification in their revenue stream appears to be a strategic advantage in the current global trade environment.
That makes sense. What about their U.S. federal government business within secure communications? That's a significant market for many tech companies.
They indicated that their U.S. federal business accounts for a substantial portion of their secure communications revenue, somewhere in the range of 20–25%.
20 to 25% from U.S. Fed Gov.
Okay. They emphasize that they haven't observed any significant cuts in contracts within this sector, which they attribute to the mission-critical nature of the secure communication solutions they provide to government agencies.
Mission-critical status providing resilience.
Exactly. The essential nature of their services likely provides a degree of stability in that market, even with budget shifts.
That makes sense. Security and reliability are paramount for government comms, making those contracts potentially more resilient. Were there any further insights shared regarding QNX and its growth opportunities?
There was strong reported interest from automotive OEMs, particularly in Europe, for BlackBerry to take on more software integration within vehicles. This Vehicle OS initiative appears to be gaining traction.
Vehicle OS, so moving up the software stack.
Potentially, yeah. Taking on more responsibility, it represents a significant potential growth area. They also emphasized a considerable focus on expanding QNX into the broader general embedded market.
Right, the GEDP thing we talked about.
Exactly, including sectors like medical devices and industrial automation, seeing this as a substantial opportunity to diversify their revenue streams beyond just automotive. This strategic push into new sectors could significantly expand QNX's addressable market over time.
So the strategy of diversifying QNX's applications beyond just auto seems to be a key strategic focus. What about this Vehicle OS initiative? How is that being viewed in terms of its potential?
It's seen as a significant opportunity to potentially increase the number of vehicle models they are involved in, and also potentially increase the amount of QNX software content within each vehicle, more revenue per car.
More models, more content per vehicle. Sounds good.
Definitely. However, they did caution that this initiative is still in the early stages of development and adoption, so it's likely a longer-term play rather than an immediate revenue driver.
Early days, but promising.
Yeah.
Got it. And finally, given the uncertainties surrounding government markets and potential policy changes, were there any comments on how that might affect their secure communications business?
They acknowledge the potential uncertainties, yeah, including the possible impact of new administrations in various countries. However, they pointed to the long-term nature of their contracts, and again, the mission-critical nature of their products as providing a degree of stability.
Stability from contracts and necessity.
Right. They also suggested that there could be potential opportunities for consolidation within the secure communications market in the long term. So while acknowledging near-term uncertainties, they also see potential future opportunities, perhaps M&A.
Interesting. Navigating some potential near-term headwinds, but also keeping an eye on potential long-term opportunities like consolidation. Okay, we've covered a significant amount of ground here, examining BlackBerry's financials, strategy, and outlook. Let's try to bring it all together with some key takeaways for our listeners.
Okay. In summary, BlackBerry demonstrated pretty strong financial performance in both Q4 and the full fiscal year 2025, consistently exceeding their own expectations across revenue, profitability, and cash flow in their key divisions.
Meeting their own numbers is always good to see.
For sure. And the successful divestiture of the Silence business represents a really significant strategic realignment, enabling them to more sharply focus on their core growth drivers, QNX and secure communications. This allows them to concentrate resources and expertise on areas where they see the greatest potential, which seems prudent.
And it's quite clear that their QNX business continues to hold substantial promise, evidenced by that growing royalty backlog. What was it, $865 million?
$865 million. Yeah.
And their strategic expansion into a diverse range of new embedded markets beyond just the automotive sector. Despite acknowledging some potential near-term uncertainties in both auto and government sectors, BlackBerry appears to be entering fiscal year 2026 from a considerably stronger financial foundation than they were, say, a year ago. This suggests a positive trajectory overall.
Yeah, and what I've found particularly noteworthy is the continued growth of that QNX royalty backlog, especially when you consider some of the challenges and, noise in the automotive industry recently.
Right, despite EV slowdown talk and things like that.
Exactly. It really underscores the fundamental demand and value proposition of their embedded software. Furthermore, the sheer variety of strategic partnerships that QNX is forging, spanning from automotive to medical tech to robotics, hints at a much broader applicability of their core technology than perhaps was previously widely recognized. This diversification strategy could really open up significant new revenue streams in the future.
That's a fascinating point. And it leads to a compelling question, maybe a provocative thought to leave with. With the increasing complexity of software-defined vehicles and embedded systems across a multitude of industries, could BlackBerry's foundational software, QNX mainly, become an even more indispensable component?
Like the underlying plumbing.
Exactly. Could it not only drive revenue growth for the company, but also be a catalyst for fundamental technological advancements in these sectors? What entirely new domains might QNX revolutionize in the years ahead? It's certainly something worth keeping a close watch on.
Definitely one to watch.
Thanks for joining us for this deep dive.